Good morning to you both, and it may seem a little bit early to be talking about wine, although I'm not quite sure what time your body clock's on after your marathon coverage.
I have no idea, but I certainly haven't drunk for a few weeks, that's for sure.
Probably for the best. But that being said, as you say, wine is proving itself a very lucrative asset class. The asset class is maturing, and investors are looking at it as a way to find returns these days in what is a very volatile environment. So I've been taking a look, I've been getting a flavour for the market. Let's have a look. Few things in life can't be enhanced by a fine wine, and, increasingly, your investment portfolio may be one of them. With low correlation to the global stock market, a good collection of the alcoholic stuff can be an excellent accompaniment to your investment portfolio. But not all wines are investment worthy, and knowing where to start can take a seasoned palate.
It needs to improve with age in the bottle. There needs to be some brand recognition. And perhaps crucially, it needs to have a resale value, so a sort of active secondary market.
Fine wine consistently ranks as one of the best performing asset classes in the Knight Frank Luxury Investment Index, which compares the annual returns of collectibles including art, watches, cars and handbags. Over the past 10 years, fine wine prices have risen 149%, the second highest return of any alternative investment after whiskey. But as with the aging process itself, investing in fine wine typically takes time and a strong stomach. Prices fell 11.3% year on year in October, retreating from a high base following a COVID-induced rally, according to the Livex Fine Wine 100 benchmark, which tracks the 100 most traded fine wines on the secondary market.
It's not a short-term play, never has been.
Investors looking to enter the wine market can think of the investment like a piece of art, with quality, rarity and provenance all factors to consider. For that, research is key, but so too is passion.
If you don't enjoy drinking great wines, then it becomes a rather boring investment class.
That passion was the main motivator for Taiwanese curator Pierre Chen, whose collection of 25,000 bottles went on auction in Hong Kong last month, in the first of 5 global sales. The collection, hosted by Sotheby's, is expected to fetch up to $50 million. The sale comes as increased accessibility and a growing consumer base has sparked a boom in the wine market. Fine wine auctions at Sotheby's have almost tripled in value in the past decade, rising from $58 million in 2013 to $158 million in 2022. Over the same period, the number of bidders has increased by nearly 400%, and the number of new bidders by almost 500%. Now, Sotheby's was telling me there that actually the increased interest is primarily coming from the US and parts of Asia, but also the sort of 30 to 40 age bracket. So it is younger investors who are getting involved and seeing the potential now of this asset class.
I thought it was a brilliant package, by the way. Look, I've had a little look at this sector quite a bit, and I think there's two things. One, he's right. You don't just go in and try and get in and out of this. It's not that kind of product. Absolutely. You don't day trade wine, and if you do, good luck to you as well.
Probably had a few by that point if you tried.
No, there's another story. And by the way, that bar you're in, I used to go there many decades ago.
I don't want to hear.
No, you're really not going to hear. I can't remember. But I do remember being in there, though. I think that was about it. But it's just interesting. We've all got pensions. We've all got bond holdings, presumably, as we get older, more of those, and the usual kind of. But actually, one thing about this sector is it is a bit of fun as well, and can make you. It's not just about Claret anymore. It's not just about Bordeaux, is it?
No, absolutely. I was asking, so what are some of the other recommendations? And Burgundy is a huge region, of course. One unloved, and this is your tip, one unloved one is the 2016 Bordeaux. So you can keep an eye out for that. Maybe speak to your dealer.
Because there was good. I can neither confirm or deny that I do invest in wine.
Steve, get on with your dealer now.
A little bit of a reveal there. But what 2016? What, because of the quality of the grape and indeed the supply of the grape?
Yeah, and just overlooked by some of the other sort of years that have done a little bit better. But of course, there are other considerations that investors would need to think about, and so this is some of the tax exemptions which it has, but also you have to think about where you're going to store it.
Well, that seems like a big worry. I mean, obviously, as an amateur, the wine that I have in my house, it's always so unnerving if you put it too close to the heat or too close to the sun. You've got to be really diligent about storage.
You'll be paying additional fees and VAT if you're storing it yourself at home, so you might want to store it in bond. And as I was told, that sort of saves you from any fits of enthusiasm if you want to try the wine, if the passion really is there.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.